Okay, so this, I'm going to do an example for the first one on video, but you'll notice that in the Excel spreadsheet example that appears in the additional resources section, I've actually got a numerical example for both. But I'm just going to go over the one except for a couple things, just over number one. So the first one says Amanda invested $10,000 cash in capital stock of newly formed corporation. So what that means, remember, if we think of dead, cash increase. Cash is an asset account. So remember, asset accounts increase with debits. We're going to debit cash for $10,000. Capital stock, it's an equity account, but it's not an expense account, it's not an asset account, it's not a dividends account. So that'll increase with a credit. So we're going to credit capital stock $10,000. Next is purchased equipment on account for $5,000. What happened here, and if she paid it on account, that means that it's account payable. So equipment again is an asset account, increased with a debit of $5,000. Accounts payable is liability account. That's going to increase with a credit for $5,000. Next one is received $20,000 from customers for services rendered. $20,000 cash increases with a debit. Revenues $20,000. That's an equity account. It's increasing with the credit. If you notice, when we do the debits and credits, we indent slightly for those credits. So the debit's flush left and the credit is indented slightly. Next one, received a bill for construction supplies in the amount of $1,000. And what we have here is supplies expense $1,000, accounts payable. Supplies expense $1,000 debit, accounts payable $1,000 credit. Next one, provided $8,000 of services on account. We're going to debit accounts receivable for $8,000. That's an asset account. Transaction happened, but the money hasn't changed hands. So it's an account receivable for $8,000. And then we have revenues that we're going to credit for $8,000. Next one, we paid employees for $2,000 of wages they earned. That is going to be wage expense, $2,000. That's a debit. Remember, an expense account increases with a debit. Wage expense is $2,000 debit. Cash decrease. So we decrease an asset account with a credit. So cash is going to be credited for $2,000. Next one is collected the amount due for work provided on January 18th. Well, on January 18th, we had provided $8,000 of services. So now what we're going to do, before that was an account receivable, we need to basically get rid of that because it's no longer owed to us. So we're going to debit our cash for $8,000. Accounts receivable, remember that's also an asset account, but now it's decreasing because that money's not owed to us. So we're going to credit that for $8,000. Next one, paid the amount due on equipment purchased January 4th. On January 4th, we purchased equipment with an accounts payable. We need to get rid of that account payable. It's decreasing. It's a liability account. Liability account will decrease with a debit. So we're going to debit accounts payable $5,000. We're also decreasing our cash. Cash is an asset account. So we're going to credit cash for $5,000. The next thing we did was purchased and used construction supplies for cash in the amount of $1,000. So we are going to debit. It should actually say supplies expense for $1,000 and credit cash for $1,000. Supplies expense, which I did put down on the example I sent you in writing, but I forgot to put it down here. But supplies expense, that's an expense account. It increases with a debit. So if we're paying our supplies, we've increased our supplies expense account by $1,000 and decreased our cash, which is an asset account, by $1,000. So we're debiting supplies expense, crediting cash. Last one, company paid Amanda a $2,000 dividend. Our dividends account increases with a debit. So we're debiting dividends for $2,000. We decreased our cash. Cash is an asset account, so we're going to credit that for $2,000. These items are for question number 2, and there were just some items where they mentioned travel expense. Since we didn't have that in our first example, I just wanted to let you know that travel expense is also an expense account. It would increase with a debit. There's also a journal entry for furniture. And the furniture they purchased for $5,000, part for cash, part for an accounts payable. So we would debit the furniture, which is like an equipment, an asset account. We would debit furniture for that $5,000, and then the credit would be divided between cash and accounts payable. The only other thing I wanted to tell you is that the rest of 2 is just on the Excel spreadsheet. If you have questions, feel free to contact me either by email or phone. And if you have any questions, I put a whole bunch of information in those additional resources. Go through it all. The reason I'm suggesting that is there will probably be questions you will see in a quiz that you will be able to get the information from those old study guides I've provided in the additional resources. So it's a good thing to go through all of those. And that is it. If you have questions, give me a call. Have a great week.